Welcome to the Selling South of Boston podcast. I'm Kimberly Dawes.
And I'm Renee Weston.
If you're buying, selling, investing, or just trying to make sense of today's real estate market, you're in the right place.
Every week, we're bringing you local market insight, expert interviews, insider tips, and real conversations that help you make smarter real estate decisions.
No fluff, no sales pitch, just honest advice from our team who are passionate about helping home buyers and sellers.
So grab your coffee, turn up the volume, and let's talk real estate south of Boston.
Welcome back to another episode of the Selling South of Boston podcast. And I am so excited because we are actually going to be interviewing today one of our favorite lenders, John Harrington from LoanDepot.
Thank you. Happy to be here, guys. Very nice to see you guys.
Welcome and thank you for...
Love the podcast. I'm happy to be here.
We're
You
excited
guys are doing
to
a
have
great
you
job.
here.
You guys do a great job with this, so I'm happy to be here. I'm excited.
We are so excited to have you.
Thank you.
So we have, obviously first-time home buyers, people who have bought and sold before, so there's a lot of, interesting facts, or people that bought way, way back and they thought, oh yeah, we still know what to do, which is not always the best. So, we noticed, like with our first buyers, that they, that they're looking for everybody for advice and whatever. So we always recommend that they go to a professional first, but you know how that goes. Sometimes they don't, and then they get advice from all these people, and then they're totally lost. So we're excited to have you kind of guide them today.
Yes, of course.
And what if a home buyer, they're looking at homes, they're starting, they're wondering if they make enough money, to purchase a home, what kind of credit score they might have. What would be a good way for them to get ready?
Well, once they talk to you and ask you these questions, the best thing to do is really have them connected to somebody like myself, or preferably myself.
Yes.
But that first phone call, and sometimes it can be tough for first-time home buyers. It's scary. It's the first time they're doing it. It's a big purchase. They're not sure of what somebody like myself will give them for information back. So sometimes that phone gets very heavy when that happens. It could, So I recommend that, let me call them if it's okay. And that way that phone call is coming into them instead of them coming out to me, because they're not sure who's on the other side of that phone. So when I do that, I really want to find out first what they're thinking, what their plan is. What are you looking to do? Why are you looking to do it? Well, we'll get married, or we're doing this, or we do, but really getting information from them to answer some of those questions. So we have a lot of flexibility with different things. So I guess the first thing people ask about is credit, right?
Right.
So on the credit, we have some flexibility with different programs. And believe it or not, you're going to be shocked at some of these answers that I have. Yeah. We actually have a program for a credit score that's at least 520, believe it or not.
Wow.
All right? So that's pretty good. That's one of our programs we have. So I really kind of get some information from them. So if they have, I really want to get their first questions from them. What their concerns are, or what they're not sure of for this process first. So it kind of leads me into kind of what we can talk about. So people ask what they can afford, right? Is that the initial question? So everybody's different. Everybody's different. I can ask all three of you, and everybody's going to have a different situation of what they want to do, what their situation is as far as income, what their situation is as far as debt. We really have to look at the overall picture before I can answer that for that particular person. However, we have situations that are set up for most people to be able to get a mortgage and get a property and purchase. But everybody's different in what they can do and what they want to do. And then maybe some might have to kind of wait. But however, we're here to help them. And then next process. The first one is talk to you. Second one is the phone call. And then we can discuss the next steps on that. But I know you have some questions. Particularly.
We have a lot of questions.
In general, we want to talk to you. And then we can give you some answers on some of the questions, really help you with that process. And you really want to have what they call a pre-approval letter. That is the big thing that we're looking for to help you out, to be able to go out and make offers on properties. So what's the next question?
All right. Yeah.
Yeah. It was like me.
I couldn't see my script.
That's okay.
It's okay. You kind of answered it already, which is nice. It kind of just flowed into what you were saying. But you mentioned debt to income, and that's a big ratio that's involved in the mortgage process. So could you just kind of explain a little more about that and how much, a lot of people are wondering how much income they have to make to actually qualify. So could you kind of discuss the ratio and everything like that?
Sure, I can. So what we're using for income for most folks that are W-2 or salary or somebody that has W-2, we're looking to use your gross income. And how you get that gross income, it's different for everybody. So some people are salary, some people are work 40 hours, some people work part-time, 24, 32. Some people have overtime, some people have bonuses, some people have commission, and some people are self-employed. And we look at all those people differently. So my job to answer that question for somebody is really to find out what their income is. And they're calculated different ways. The overtime and the bonuses and the commission, we usually look for, usually look for like a 2-year history of making that type of income.
Okay.
If you're making the 40 hours or 24 hours, we usually look for like a 2-year history of that. And some of that 2-year history for some of the younger folks that are getting out of college, your college years spent can be part of that 2 years history, which is always kind of nice, and people are kind of surprised, especially if I'm talking to some parents like, oh, they just got out of school last year, they don't have 2-year history. Well, actually, if you went for school for nursing or whatever, and you have a nursing job and you're in there 6 months, that's fine. We can actually help you.
So you can actually use part of their college or their educational basis.
As part of that 2-year history.
Didn't know that.
Yeah, so when you get out of college and you get your first job, you can really go out and actually buy a property as long as you have the down payment, things like that. So that's part of what we look at, and some of the questions that I do have. But I certainly want to encourage people to really call in and find out what they can do.
Yes.
And that's what we're talking about here. Initially, we want to talk. And then I can help you, guide you. Kim knows I've been doing this for like 25 years. So I try to have as many answers for your questions as I can.
Yes.
Yeah, that's awesome to know about the college thing, because I'm in college, obviously, and I didn't know about that, and I don't think anyone that I talked to in college knew about that either. So that's really nice to know. Yeah. I know you mentioned too there was a credit program for someone with like a 520 credit. What would be like an average credit score that you would say you need to get a home?
Well, it comes down to person's situation. So if you do have a 520 credit score, we do have a program that we could take a look at that could help you with the purchase. On average, they really do. They range anywhere from 520 to 800. However, the effects of a credit score, let's just put it that way. So if you have a 520 credit score, I'm not going to have that many options for programs for you as you would if you had like a 750 credit score or something. So they really go from 5 to 6 to 7, and then 8 is like just almost perfect credit. However, when I'm looking at credit for somebody, the first thing I look at, if they have a 520 credit score, I know exactly where they have to go for a program. So it does limit them on what their choices and options are for programs, but there might be something there for everybody. However, the higher you have for your credit, probably the better program you're going to have, and probably the better rate we're going to be able to offer you. Okay. And there's some other things with credit too, mortgage, insurance, and things. But really, the better credit you have, more options than maybe the better options you're going to have for that. However, if you have that credit, we might be able to help you with something for sure.
That's good to know. It makes it more accessible to everyone, I think.
And I think Krim had mentioned somewhere along on one of your videos, we do have programs that could help. If I have your credit, I could take a look if you can pay off something or pay something down or whatever that might help improve your credit. And to that point as well, if you're thinking about purchasing something, whether it's soon or down the road, you may want to talk to us now, because if you do need a program like that we can take a peek at to say, okay, you know what, maybe we want to pay down this or pay off that, but this will improve your credit to over 520.
Right, because not everything's equal that contributes to your credit score.
That's correct. In this program, I'm not here to fix somebody's credit, but I can give some suggestions on maybe how to increase your score, like maybe 6 months or a year down the road, which would also be able to put you. I just had a young couple about a month and a half ago and they wanted to get into a certain program, and I did just that. I said, okay, you got, number one, you have to do this, you have to do that. Once you do that, we'll check it down the road, and we did, and now they're out looking at homes right now.
Well, and I think to your point with all of this, that, you know, it's education, it's information. So, you know, when I was young, I remember like I had some credit cards, and I was like, I'm never going to be able to afford a house because I have, you know, these credit cards. And again, if putting your head in the sand is not helpful for you, right, or for your situation. So, like you said, it is kind of just getting what your own personal situation is.
Yeah, and I hear a lot about the debt or credit cards, you know, or student loans and things, and people just like are fearful of that. Well, really, what we look at is, for payment-wise, is what they have for monthly payment. So if you have $20,000 in student loans and you have maybe a car or whatever, but we're not really looking at, all right, you have $80,000 in debt. We're looking at you have this amount every month for a payment.
Right.
And then we add that to the mortgage, and then we see what we can do for qualifying based upon your income. Yeah, okay. I know you got more questions, and somebody's dying to ask me one. Trying to get as many answers as I can. On cue.
Absolutely. So let's bust some of the biggest myths. Do buyers really need a 20% down payment?
Excellent question, and that's another question I hear. And that's a question I really want to get that answer out. And believe it or not, I know some people in this business for quite a while that still think you need 20% down. However, to answer the question, you do not need 20% down. The myth on the 20% down, and this is what it comes down to with the 20%, is that if you put 20% down on every program but one, that'll eliminate mortgage insurance.
Okay.
Okay, so mortgage insurance is the insurance that the bank has to allow you to put less than 20% down. Years ago, you had to have 20% down, a long time ago, probably 30, 40 years ago. However, they came up with mortgage insurance to agree with the bank, okay, if they take out this insurance, will you allow people to put less than 20% down? So people can go out and buy houses. This was a long time ago. And they came up with this. And that's really what the 20% comes from, is that you won't have that mortgage insurance payment. But that's not a bad thing. I've had conversations with folks that say, oh man, you know, I want to save up for that 20%. They're at 15 or whatever, 10%. And I'm like, well, why don't we take a look at how much your mortgage insurance payment would be? And they're surprised. Some people think it's a couple $100. Some it is.
Sure.
But if you're almost close to that 20% or whatever, it's, you know, sometimes I talk to people like it's $20 or it's $50 and like that's it.
Yeah.
Well, I think some of these terms have gotten a bad rap. And a bad rap from just misinformation, right?
Yeah.
From
like
everybody telling me
our
things.
parents telling us things, or you're speaking to somebody in your office and they're telling you certain things, and until you speak to somebody that does this every day and is in the know, it could not be a big deal.
Yeah, well, exactly, and you know, and that's why I go back to folks that are like, oh yeah, I think I might want to save a little bit more. And some of the other thing is, some people think it's the more you put down, the more you're going to save on your payment, which is true. However, really, if you want to save up for another $10,000, for most people, that's like a $70 a month difference on their payment, which isn't really a lot. But if you want to wait a year or two to save up that $10,000, that's a lot of time. And for $70 a month in that 2 years, you could probably live in on your own or have that home.
And as we know, home prices are still rising, and they're not rising
Correct.
at the levels they were through COVID and right after COVID, but they are still rising here.
Yeah, I wanted you to answer that one. I don't
Okay,
want to talk
you didn't
about
want to go
that.
there?
I stick in my own
Okay.
lane, people. Financing, real estate.
So without getting too much into the weeds, because we could talk about this all day long, can you maybe explain maybe some of the loan programs that people should be thinking about when they're calling you? Like, I know there's a bunch of loan programs. I do not know them all. I don't want to know them all. It's your job. So what would you say some of the various loan programs are?
Well, I guess the standard ones that most people are aware of or not aware of is conventional. A conventional loan is really Fannie and Freddie Mac. And why they call them conventional is if you're going to have, I don't want to say standard, but you're going to have a certain amount of credit, you're going to have a certain amount of down payments, and you're going to have a certain amount of assets to kind of work that particular program, which is okay if you fit in. That's usually if you fit into that one, that'll be the one that they normally would look at for somebody.
Okay.
Because it's just the one that's going to probably offer you better rates, the mortgage insurance, that type of thing. Veterans loans they're really for, well, it's called a veterans loan, but it's really for active duty members, Army, Navy, Marines. Who am I missing here? I'm so sorry. Space Force and Air Force. No, Space Force is a new one. Sorry, folks. In the Coast Guard.
I never heard of that one.
Coast Guard is actually included as part of that, and also National Guard
Okay.
are part of the veterans loans. They actually give a certificate out for that loan. So if you have that certificate, it actually is a good loan for you. And the reasons for that, they do allow for no money down. Usually the rates are pretty good on that. And with no money down, there's no mortgage insurance. So that's another
That's cool.
program that's
Right.
very good. I've been helping veterans throughout my career. I'm very happy to do so. It's great when that happens. The other one, the FHA loan, that's one of the ones that goes down to a 520 credit score. And so does the veterans loan, actually, by the way. So the veterans out there, if you think your credit's a little challenged, you might want to talk to me as well.
To know.
And then we have a USDA loan, which
We haven't done too many of those recently, or I haven't.
No.
I used to do them all the time.
exactly. I don't know if we
Back
did
in
it
the day, we used to do a lot of those.
Yeah, unfortunately, that one particular one got a little outpriced with the prices of homes because they allow for a certain amount of income for that, and I think it just kind of got lost. And then Plymouth actually used to be on the list for them, and
They're not.
They're not on the list any longer. And the other one would be mass housing, and they're nice. They've increased their income limits, so they're starting to be a little bit more popular now. And they do offer a down payment assistance program with that program. So there's certain things that you have to look at for that, credit and debt-to-income ratio, but it's still an option there that I'm seeing more of lately.
Okay.
Okay.
So another question that we've had recently, and we've seen recently, is can family help with down payment assistance, and can buyers use gift funds?
Okay. There's actually 2 ways to answer that. So parents or relatives, actually, don't have to be parents, grandparents, siblings, can actually help 2 ways. They can actually co-sign for somebody, which means that we were talking about debt-to-income ratios. That will help somebody that is probably maybe looking to buy something a little bit more than they have on paper, or they know they might be getting a raise down the road or whatever, but they feel comfortable with making maybe a little bit more of a payment that they're qualifying for right now. But their parents can come in and help with that debt-to-income ratio as a
Okay.
co-signer.
Okay.
I've seen a little bit of that lately, but if they feel comfortable with the payment, we want to make sure that they're doing that, but they can help in that way
Okay.
as a co-signer. Second way is the gift, and that's popular as well lately. So a gift is really your parents can gift you money. I believe it's $19,000 a year, but you have to talk to your financial advisor on that. But it's a tax thing. But you can
Okay.
actually gift. For us, you can gift $200,000, $250,000. We don't really have any regulations or tax repercussions on that, or guidelines for that. But there might be some tax things.
So you'd
for the
want to
financial
talk to your
advisor.
CPA.
Yeah.
Okay.
And make sure everybody's comfortable with that. However, they can, and they call it a gift letter. But basically, it's just an agreement that the funds that somebody has given you for that, they don't have to pay it back. It's
Okay.
not a loan. So anytime somebody says, I'm going to borrow money from somebody, it's going to be a gift and they're not paying it back.
Okay. So are there first-time home buyer grants or assistant programs right now available that someone could take advantage of?
Yeah, we have a few ourselves that
Okay.
help with the down payment, and we also have the mass housing that's outside of that, but it's the one I was just talking about. And there's actually right now goes up to $30,000. That's possible, depending on what their income is and their credit is, and that's available.
Okay.
Yeah,
good to
there's
know.
some options.
Yeah.
There's options, and we're here to kind of talk about those options. But yeah, most definitely.
Well, people usually focus on, what the mortgage payment's going to be each month. But is there, what is actually included in that monthly payment? I know you talked about, mortgage insurance if you don't have the 20%. What else is included in that?
All right. So the mortgage payment itself that we look at for qualifying is your principal and interest. So that's the loan amount that you're borrowing. So say you're looking at a $500,000 house, but you're putting down 10%. You're borrowing $450,000 is the loan amount for that. So we take a calculation based upon what that current rate is for the program that you have, and that gives us that payment for the principal and interest. Then we're adding in, if you're putting down the 10%, you're going to have some mortgage insurance, so we'll add that to that as well. So that's really the mortgage itself. Those two numbers don't change. About 30 years or 25, 20, or 15 year or 10 year, whatever the length of time you have for the mortgage payment, they don't change. So once it's locked in on a 30-year fixed, or if it's a fixed program, we do have what they call ARMs, which are adjustable rate mortgages. Won't get too detailed on those right now, folks, but they're available, but they just have a fix for a certain amount of time, and then after that time is up, they can adjust to different rates higher.
Okay.
So that's part of it. Then you have your taxes, and every town's different out there. However, talking to you guys, and my estimates are pretty good throughout the years. So it depends on what town you're in, and how much your property is going to be, what the taxes are going to be. And then there's insurance you have to get, homeowners insurance, and that's coverage in case something happens to the house when you own it.
Right.
You have to have that if you're getting a mortgage. Again, that varies depending on how much the house is and what kind of coverage you're getting. But I also try to give somebody an estimate when we start off, and however, whenever you get that quote for that particular property at that particular time, that's the quote we'll use, and that's the amount we'll use. And those are the things that are included in your mortgage payment. You know,
Do most people still escrow, or is that not an option? Like, as far as making that decision that it's not an option?
Well, it's an option on most programs if you're putting 20% down. If you're not putting 20% down, it's not an option.
Right, okay.
It changes the rate just a tad bit because now we're not collecting it, so there's a bit of an adjustment sometimes with the rate if you're not going to have it done.
Right.
But you have an option of waiving it if you are putting the 20% down on most programs.
Good to know, good to know. Very good. Let's see, we already answered that.
That's
Just
okay.
Go over to closing costs.
Yeah.
All right, so now I'm gonna grill you on closing costs. No, I'm kidding.
I haven't gone for a sip of water yet.
So buyers tend to be a little bit confused or sometimes don't know what a closing cost is versus a down payment. So could you kind of explain what exactly a closing cost is?
Sure, and actually, really, when I'm first starting to talk to clients, their first time or even the second time or third purchasing, one of the first things I really key on is I really want to try to find out what type of property they're purchasing, whether it's a single-family home, a multifamily, or a condo. But I also want to know how much they're looking to pay, a purchase, get an idea, then how much the down payment is on their plan. But then once I get that, I also go in and let them know, okay, so you're looking to put 10% down to $50,000 on a $500,000 purchase. Also, there's closing costs involved. So I get right into it right afterwards. I don't, right up front, and I give an idea what that might be. So I separate the two normally, and then I add them together.
That's good.
I'm like, okay, so you need 50 for your down, well, you want to put 50 down for your down payment. Your closing costs are another maybe 12 or 13. So we're good. You have about 63 together. If not, let's talk about options. You can put less down, maybe, whatever. But I want to make sure that they're comfortable up front with that. So I get the confusion. It's just really the deliver of the message that's probably confusing them a bit, and that's not fair. But I learned a long time ago. I sat on that other seat across from me a long time ago, and there was some confusion, and there was not a lot of communication. And I learned that lesson on my own before I got the business. And I wanted to make sure when I'm reviewing these with people, there's no surprises. And that can be a surprise if they're not aware of that. And I also let them know what options are. So in closing costs, they can get help from the seller. You guys know about this. It goes back and forth whether they can or not. It depends on what the market's doing. Sometimes it doesn't. But it can be a negotiation where you can really ask the seller to contribute to your closing costs. You can ask for 5, 10, 15, whatever. And that's allowed by us, depending on the way the prices are now. They do have limits on it, but usually they fit in. But it's a negotiation. Sometimes it works, sometimes it doesn't work out there. It really depends on what you guys feel would work best for the offer on that property or where it might be or how long the property has been sitting there. But it's an option. And I had something else to say on that, but I
That's
kind of
okay.
lost track.
We'll probably cover it in another question.
Yeah.
Another
Thank
thing,
you.
on that option.
That's okay.
That's all right. So how much cash would you say buyers should realistically be prepared to bring to the closing?
No cash.
No.
No cash.
Or credit cards. People want to put things on a credit card.
No, can't. We have to verify where funds come from. But to answer your question, that's another one where it depends on really what they're doing. So it depends on the situation. I've had veterans that really had to bring no money to the table because they were 100% financing, and the seller were paying closing costs, and they legitimately were just getting back their deposits they made to cement the contracts. Going through, they have to put the deposits down, but at the closing, they were actually getting the money back or some of the money back.
I just want to stop you for a minute there because we've worked with veterans before as well, and we love working with veterans, representing them. But sometimes if somebody is not explaining earnest money to them, some of them think that they can put an offer in with zero money down. And when in Massachusetts, in order for somebody to take their home off the market, there is escrow money that needs to be put down for any seller to really want to take their house off the market. So there's some skin in the game, and like you said, they can get that back at closing. But we would. I mean, I don't want to just throw out numbers, so I'm not going to do that. But I think that it can be minimal based on your situation. Everybody's situation is different, and we'll discuss that. But it's not like you can put an offer in with no money down to take that house off the market.
Well, that's correct. That's your contract.
It's a dicey conversation to have.
Yeah, and it's the contract. Some people come back to me. It's like, well, it's not my contract. That's your contract.
Yes.
To get the offer accepted and all that. But you're correct. Yeah. So if there's some money that they need they should really know up front that they need a little bit of money to actually deposit it down, and that's a good conversation to have with you. It's a good conversation to have with me because we need to know where that money would be coming from, and all those things. But you're right. So they can actually do the transaction and get some money back with no money down, but they might need some money to put in for the transaction.
Yes,
that's correct. Thank you for clarifying that.
Thank you for that tip. So you kind of answered what my next question was going to be, which was if the seller could help pay for some closing costs. So we're just going to hop over that one and head into what about lender credits? How do those work?
Yeah, there's something that it depends on where the margins are with the rates. So basically how that works, when we have interest rates that we have to look at or review, it's really, we have about a good 10 or 15 rates on one program. And when I'm talking to folks, I let them know where zero is. And zero is, you're not getting any money back or you're not paying anything to get that particular rate. But the way rates work is you have, I guess we'll start with like 5 for now, but it's but 5. But if you go to 5 1/4, we might be able to give you a lender credit back because 5 is a zero rate basically, so they don't have to pay anything for that and not get anything back. But if they went to 5 1/4, they might get some money back as a lender credit. And if they go the other way, you might be able to pay to get a rate down to like 4.75. But they would pay that to make that work. So rates are not, when people ask what the interest rates are, well, it could be really whatever you want, basically, but you might have to pay for it, or you might get it.
It's the worst question that we get every day.
I know.
Really?
Yes. But it's even worse for us because we're like, we have an idea, but it's. I mean, I did that video the other day, and it was so funny because educated people are asking me this every day, right? Like it comes from everybody. Like, so what are the rates? And I think it's just a way of having a conversation about real estate. It's not really because if I said 10%, it might not mean anything to anybody. Like when you go charge something at Kohl's, the rate is 19.99 or 24.99%, but you're never even thinking about that when you're making that purchase.
Yeah,
it's just I know it's different.
Yeah.
But the rate means nothing if you're not looking. It's like me asking you what your credit score is. Like, what's your credit score? Then maybe we can talk about what your rate's going to be. No, but it's just a funny conversation, and I think our job is to educate.
Yes,
do more of this so that people understand that that's going to depend on your complete situation, and we don't have a crystal ball as to what your rate's going to look like.
No, I know. Obviously I get the calls all the time. What's your rate? I'm like, well, I really can't answer that. It depends on what program you're using. It depends on what your
so
credit
many factors.
It's just all those things we had just talked about. Really, you put all those together, and that's when I can answer where the rate is. I can't even answer it. it's not an upfront question for me. It's an after I review everything kind of
And it's definitely not an upfront question for us.
No, yeah, but no, you're right. Though it gets people involved, and it's I guess I'm laughing. I get 7 seconds. The rates change. They could change, and they could change right now, in one way or another.
Okay.
You know what I mean? So I have that conversation with folks. I'm like, this is what I can offer you right now, but after this phone call, it could be one or the other. I mean, it could go down that quickly. It could go up that quickly. I don't have a crystal ball. I wish I did. And especially with everything that's going on right this second, things just change when somebody says something out there, and it affects the way they look at the bond market. However, I mean, and I think when you made your video, you were talking about payments, and that's kind of where it comes down to. Right. This is your payment. This is what you're going to have for 30 years, whatever the tax insurance might be, but this is what you have to feel comfortable with. Whether it's $2,500, $3,000, $3,500 for, I have those conversations up front. I mean, what you're looking at $500,000 with 10% down, I'm going to estimate your taxes and insurance, but this is kind of where your payment is. Are you good with this payment? Whether the rates go up, down, or whatever, as long as we're in that category, I just want to make sure you're comfortable with that payment. No, some people ask me to buy $600,000 with 3% down, but they want the payment to be $2,000. Yeah, that's a tough one because it's not possible, unfortunately. But I just want to make sure people are aware of where the payment would be, and not just kind of go over some figures and then go out and look, and then they find out after everybody's done their thing with you guys and find out their payment's not $2,000 or $600,000.
Well, that's why they need to talk to you up front.
That's why I have those conversations up front. I don't. I want to be helpful to people. I'm here. We're all here to help you with this process.
Absolutely.
One of the biggest purchases that most people are going to have in their lifetime, and sometimes we forget that, but it's true. And we're here to help you through the process and make it as easy as possible. And we'd like to have smiling faces on at the closing table.
Absolutely, we do.
These guys know I take pictures all the time of people are there because it should be a great experience for you. And we're here to help you with that.
Absolutely, and we're here to help you through the bumps because there are bumps sometimes, and that's why we are here to educate and explain. And we also are learning how to be better all the time. From each experience, of course they don't know this. They've never bought a house before. They haven't bought a house in 30 years or. So we're going to end with some rapid fire questions, just a couple, and then Anna will do a beautiful wrap up for us because what this conversation really leads to, right? Hence the 7 seconds is we need to have more conversations because there's so much to know about financing and lending when it comes to buying, right? In real estate, it's just like you can't cover it in a 30-minute video. So I'll ask you a couple questions.
Sure, I'm ready.
Should buyers get pre-approved before looking?
Yes. As a matter of fact, I'll add to that. So a pre-approval is actually myself or the lender you might be talking to, where they're having this conversations, all the things we just talked about, but we've looked at your credit. I prefer to make sure we're looking at where you're getting your income from, whether it's your W-2 or your tax returns or whatever, to make sure those numbers are correct. And you make sure your assets there and ask you a couple other questions. And then we have programs they can run it through, or we do it manually. Mostly it's through programs. So as long as the information we're feeding in to the program is correct, then you should be all set with a pre-approval. What I'm doing lately to help with offers with my clients to be able to get these, it's a little bit of a competitive market, right? I mean,
it still is, yeah.
It's actually the second step in that process, usually when you find a property, is actually I'm collecting all these things, put them in a pile, and I'll send them up to what we call our underwriting. And our underwriters are actually when they put that final stamp of approval on there. And that's what in our business we call the commitment letter. What I'm doing is actually gathering all that information together, sending in underwriting, and doing it before you have a property under agreement. And so when you're making offers, we just actually did this for a client.
You did.
And they had a commitment with their offer, and their offer got accepted for various reasons, I believe.
Yes. They actually listened. They listened to us, and they went through that program with you, and that gave them a competitive edge on a very competitive home in Weymouth, and they're closing next week.
Yeah.
And it didn't hurt that I kind of knew the real estate agent on the other end too. I think so. I think it was all good.
Oh well, that helps a little bit, too.
I think I've had that in the past, be helpful.
John, that's one of those,
That's what,
I
know. It is when I saw it, I'm like, yeah, okay, that's good. I help. I love it when I can help and add an extra benefit to that. But that's a very good program to help in this market because it's one more thing that the seller does not have to worry about, or the listing agent. If you have a commitment letter, part of your contract that you first sign in your offer, the next step is to get the commitment. But if you already have that before you sign that offer letter, it's definitely an advantage. It's a benefit when you're making offers. It makes you more competitive, for sure.
Definitely.
To answer your question.
okay, two more questions and then we'll wrap up. But how long does a pre-approval take? We have a lot of people that call us and they want to get in to see a house. We are not showing you a house without a pre-approval or proof of funds. We're just not. So to go back to that first question, our team does not do that because you're wasting a lot of people's time. You're wasting our time, you're wasting your time, and you're wasting the seller's time and the seller listing agent's time because we don't know what you're approved for. And just because you have a high credit score, you're telling us you have a high credit score, I mean, that's like me telling you I have millions of dollars in the bank. Anyone could tell us anything. So we need that in respect to our co-brokes when we're showing homes. We just want to make sure that when we're bringing somebody into a home, you're legitimate. Right. You're saying we're putting, your money where your mouth is. And so how long does a pre-approval take so that people can be prepared?
All right, well.
The short answer, I guess.
Short answer, okay, good. Yeah, good. Thanks for reminding me on that. It depends on the person's situation. So, and I have these calls all the time. I'll get calls at 5 o'clock on a Saturday. Yeah, they get either want to make an offer or they want to get in the property. Right. We need something right away. Some people be quick. I mean, I like to do mine within 24 hours.
Okay.
Or, I mean, I can do in an hour. You know me, I'm available to do it as quickly as I can for the client and for you. And some of them more tricky. If you have to look at tax returns, then that process takes a little bit. Yeah, it takes a little bit, maybe a little bit longer. But to answer your question, that pre-approval process can take anywhere from an hour to a couple of days.
But it makes sense to get it done if you're thinking about it, and at least talking to you and knowing what documents they may need to provide you in order to get a pre-approval.
Yeah, well, the only way I can advise that is actually the first step you might want to take in this whole process is get the pre-approval first. Because it's tough if you find, and you have more stories about this, but if you walk in the house, you love that house, and you don't have your pre-approval, and you might be one of those people who might have to take a look at, or I have to ask a lot of questions for, I need more answers, and I can't do that hour pre-approval, not because of me, but maybe your situation. You might lose that home that you had. Now you're going to be looking at
the deadline's gone.
Yeah, and it might be gone to somewhere else. So you want to get really prepped for that, and we're here to help you make that offer stand out as much as possible. But part of that is really getting prepped for it. And so when you make that offer, hopefully you get it accepted. But and then you've got the home that you really want to have. But that's all about being pre-approved and prepped up. But that timing on that is really up to some folks. I mean, I have to chase some people down just to take the calls, so it's tough to say.
Right, and we're not showing you the house if you don't have it, so you'll have to unfortunately go to somebody
else.
Oh yeah, we've done that before. Yeah,
I've got a story on that, but I'm not going to get into that. I mean, I felt bad for the realtor, but they took somebody for a year and a half, and never got them pre-approved. And
yeah, just
back when
again,
gas was $5 a gallon, and
it's education, right? It's
education.
Yeah, and this is business. At the end of the day, it's a business. It is. We get very involved with our clients. We love them. We want to know their kids. We want to know the changes that they're doing in their house. But in respect to everybody involved, we have to have a pre-approval.
Yeah.
So last question would be, what's one thing you wouldn't do after you have an offer accepted with your pre-approval? One thing a buyer should not do. Okay,
well, yeah, you shouldn't do anything with your credit, number one, and most of it is, some people might want to just go out and buy a car because they think they're all set. I've never had it happen to me, but I've heard stories. Yeah, you don't want to do anything with the credit, and if you do, you want to talk to your lender first to see if it's okay. Make sure you can make the payments on it or absorb it, but you really want to try to stay away from doing anything with your credit.
Until after.
Until after. Yeah. My thing is, I tell people, once you turn that key, as long as you're making your payments, you've got more, you're released a little bit from us, but not really.
They don't have to call you after they've been in the house for a couple
No,
years
just
to
open
do
it.
something.
Just open it. Once you turn that key, you're okay. But before that, you really don't want to do anything with your credit, or change your job. That could get a little tricky if you're in the middle of it. It depends on, everybody has a different situation, but if you're changing careers, that could be a problem.
Right, because you verify income right before the closing anyway, like a week out.
Well, yeah, we want to verify
Again,
your employment, for sure.
Yeah.
Within the 10 days of closing, we're verifying your employment, so we want to make sure. But if you're getting a promotion within the same company and things like that, that's not a problem.
Yeah.
But if you're going to totally switch off, it could be an issue. Good question.
Thank you so much. This has been so helpful to all of us and hopefully everyone listening, or definitely. But I think the biggest takeaway is just don't assume that you can't buy, because there's more than likely a program for you out there. So have a conversation, call you, and know your options. Everyone's situation is different, so that was really good that kept coming up, because it makes it feel more accessible, I think, to everyone out there.
Absolutely.
Yeah.
It's not something that's like super far off. You'll never be able to get it.
That's
like,
right.
You just got to give someone a call.
Yeah, I mean, yeah.
Give
that's-
John a call.
Yeah.
You know, yeah, that's part. It's really I'm a loan consultant, so it's really when I'm talking to you, I look at things. I either come back to you with, "Hey, you go great. This is what you have. We might need to tweak something here," or, "Hey, we might have to really look and see if we can get a cosigner." But I'll try to have some sort of a solution for you, whether it's short term, in the middle, or long term. But I'm here really here to help you out. You know, I really care. Yeah.
Thank you again.
Okay, my
If
pleasure.
you're thinking about buying anywhere on the South Shore, Cape Cod, or in Mass, we'd love to help you and build a plan that's right for you. And obviously, John can help you with that as well. So again, a huge thank you to John from LoanDepot for joining us today.
Best in the business right here on their end, honestly.
Thank you, and we'll have John on again.
Yeah,
So
yeah,
thanks
yeah.
so much, John.
Thank you so much.
Thank you very
Cheers.
much, Renee.
Cheers.
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 Oh, now I get my drink of water.
Yeah.
There we go.
Yeah, you earned it.
Thanks, John.
Thanks, everybody.